Something big just shifted in the XRP market, and if you're not paying attention to these oversold signals, you might be missing out on what could be a massive bounce. Let's break it down. Here's where we are right now. XRP is sitting at $0.9981, down about 1.11% in the last 24 hours. Now, I know that doesn't sound exciting, but here's the thing. Sometimes the best opportunities come disguised as boring price action. The coin is literally hugging that Bollinger Band lower boundary at $0.9953. And you know what I've noticed? That's often where the magic happens. We're in what looks like a technical correction, but the smart money might already be positioning for what comes next. Here's why this number matters. The RSI just hit 35.86, which is screaming oversold conditions. That's like finding a designer purse at a thrift store price. The MACD is sitting at -0.0236, with the signal line at -0.0192, both negative but showing this weak divergence that, well, it's not as scary as it looks. Now, I'll be honest. We do have some resistance above us. The 20-day moving average is at $1.0554 and the 50-day at $1.0798. But here's what's interesting. The on-balance volume is holding steady at over 14 billion, which tells me there's no panic selling happening. So what moved the market today? Well, it's not necessarily what happened, but what's happening behind the scenes with correlations. XRP has this -0.6774 inverse relationship with the dollar index, which means when the dollar gets weaker, XRP tends to get stronger. And get this, it's showing a -0.8724 inverse correlation with the S&P 500. That's pretty significant because it means when traditional markets stumble, money might actually flow into XRP. The VIX is sitting pretty low at 14.65, so there's not much fear in traditional markets right now. Now, on the regulatory front, things are surprisingly quiet. And sometimes, no news is good news. What I am seeing, though, is continued institutional interest with $10.9 million in net inflows across XRP ETFs. If the regulatory environment was truly hostile, we probably wouldn't be seeing that kind of institutional money flowing in. So while there's no major regulatory announcements, the money flow tells a story of confidence. The mood right now is, well, it's pretty gloomy. The Fear and Greed Index just hit 29, which puts us in extreme fear territory. But you know what I've learned over the years? Extreme fear often creates the best buying opportunities. XRP search trends are at a low 3.3, and FOMO is practically non-existent at just 2.0. When everyone's ignoring something, that's often when you should pay the most attention. The XRP to Bitcoin interest ratio is sitting at 1.1552, showing people are slightly more interested in XRP than Bitcoin right now. The big players are doing something interesting. We saw 178 whale transactions moving over 681 billion XRP. That's basically 100% of the total trading volume. Now, that could sound scary, but here's the thing. When whales are this active at these price levels, they're usually not selling to get out. They're repositioning. With only 806 regular transactions compared to all that whale activity, this market is clearly being driven by the big institutions right now. In plain English, we're at this stage where Elliott Wave analysis shows we're in a C-corrected wave, and the Wyckoff method suggests we're in what they call markdown phase B. I know that sounds technical, but basically, we might be at the tail end of this correction. The confidence level is only at 50%, so there's uncertainty, but that Wyckoff markdown B stage, that typically happens right before things start getting interesting again. So what does the AI think? Well, this is where it gets exciting. The AI ensemble models are practically shouting buy signals. Short term, we're looking at $1.6155 with a 97.2% upward probability. That's a 62% gain from here. Medium term at 7 days, it's predicting $1.6035 with 87.6% confidence. And the 30-day target? $1.7066 with 82.2% probability. Now, I'm not saying the AI is always right, but when multiple models agree this strongly, it's worth paying attention to. But here's what could go wrong. If that Bollinger Band lower boundary at $0.9953 breaks, we could see more downside. Those moving averages above us at $1.05 and $1.07 are going to act like ceiling fans until we break through them. And let's be real, there's always the risk that those whales decide to dump instead of accumulate. Plus, if the dollar suddenly strengthens or crypto markets face some unexpected shock, even the best technical setups can fail. Here's my take. This is a buy opportunity. The technical setup, the AI predictions, the whale activity, and that extreme fear reading, they're all pointing in the same direction. I'd look to enter between $1 and $1.02. Set a stop loss at 95 cents to protect yourself and target $1.35 for the first take profit, with $1.60 as the second target. If you're nervous, dollar cost average your way in. But if that Bollinger Band breaks, get out quick and reassess. That's it for today. Remember, I'm just someone looking at AI data and charts, not a financial advisor. But if this analysis helped you see the bigger picture, hit that subscribe button and give this video a like. The algorithm loves it when you do that. See you in the next one, and happy trading.